moves in European equity markets this morning, with the UK's FTSE 100 index currently trading flat, while the Euro Stoxx 50 index is also trading on a flat line. In the currency space, the euro is struggling against the dollar. It's lost a bit of steam and is at that 132 level, slipping below 133, while in the peripheral bond markets, both Spanish and Italian bond yields are relatively calm. Good morning. Welcome to another Daily Market Bite. I'm Ishaq, Siddiqi, and I'm going to give you a quick idea of what's going on. There's a lot of things going on, so I'll try making it as brief as possible. Let's start off with what's giving us that underlining support in European markets this morning. We had strong earnings from Google and IBM yesterday. Both beat estimates, underscoring a positive tone overall for the US tech sector. We have Apple earnings out after the closing bell today. Also AMD had numbers out yesterday, which were also strong. Now expectations are for something similar from Apple later on today. However, we have heard recent news from Apple that they are scaling back their production for iPhone 5s, so that may come into question today, and we may see a bit of a hit of that and some caution heading into the Apple numbers, so we may see the stock under pressure in the US session. So that's been the positives coming out from the corporate side of things. In terms of what we're looking forward to in the US session, we have the Republican Party are going to vote on raising the debt ceiling. They're essentially kicking the can down the road, appeasing the Congress and Democratic leaders. A vote to kick the can down the road would be essentially a positive for both. Short-term positive, however, the wider and bigger issue of how to actually address raising the debt ceiling, what sort of measures to employ, still will unnerve markets as we head into February, where the budget battle will really take off as we are going to start reaching our deadline for spending cuts. So a lot of focus in the US. I think it's going to go, well, we think, the market thinks that it's going to go without any problems, quite smoothly, this vote later on in the US session. However, markets are a little bit concerned if we see an unlikely event, that event won't go through. We could start seeing US markets move off from those multi-year highs that they're at right now. Now, in terms of what's going on in Europe, British Prime Minister David Cameron has spoken about the UK, Britain's relationship with the European Union. In his speech, he's essentially vowed to hold a referendum in 2 to 3 years' time in 2017 if the coalition government, the Conservatives, win the next general elections in the UK. If they do hold a referendum, it's essentially giving the British public a chance to vote in or out in the EU. So that's taken up some of the headlines in European trade this morning. Have on a market perspective, it's been pretty much a non-event, very muted, no reaction for the FTSE as a whole. Although we did see sterling fall a little bit, and that was mainly on the back of concerns that if the UK does exit the EU, we will see a hit on its overall competitiveness as a country. Now, sticking on the news in terms of the UK, we've also had a very strong showing from the jobs market. We had a very strong labour market data where claims unexpectedly fell again, and much sharply this time around. So quite a resilient tone. It causes a bit of questions going into the fourth quarter GDP number on Friday, where we're going to see the UK possibly enter a triple dip recession. However, at the moment right now, there's a big discord between the manufacturing and services sectors and the jobs market. And I think at this moment right now, investors are still trying to digest the overall outcome of the pretty resilient jobs market that we have in the UK, and speculating on what sort of number we're going to get on Friday. And at the same time, the BOE have released meeting minutes from their latest meeting. We've seen a unanimous vote on keeping rates at current levels, which are at ultra low levels on the whole, and keeping the QE program where it's been for the last year or so. So at the moment, investors are quite content with the MPC's decision. It seems like it was something that was very much in line with expectations. as we progress and head into 2013, I think there's going to be a bit more pressure going onto the BOE to start acting and possibly easing. However, today's jobs market data doesn't bode well for QE in the long run, and if we continue seeing strong signs from the UK economy, which again Friday will be a key day for, we may start seeing QE hopes being dashed very quickly. Now, in terms of what else we've got going on, we've had strong numbers from Unilever and also Novartis in Europe. So corporate Europe is doing well at the moment, at least from today's showing, and that's building up a bit of hopes for some of the earnings that we're going to have in, well, for the course of the rest of the week and for next week. Anyway, thank you for watching your Daily Market Bite. Tune in for another one tomorrow.